Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, we've been talking about how Nifty or the benchmarks have fallen from the highs. Now, a notable cut is coming in the mid-cap. So, the mid-cap index is down 600 points from the highs of the day. The advanced decline ratio is slightly tweaking towards declines, though it's still in the positive. But that is something that we should point out and note going forward as well, because yesterday that was the top outperformer.
That was a top-out performer, and that did very well. And in fact, in the last half hour or so, you've kind of seen the sell-off accelerated, especially in some of the defensive names. That's what is seeing quite a bit of a sell-off today. In fact, some of the names or the growth stocks have actually seen some buying today. But quite a lot lined up on the show. Let's start off with the top headlines. Stocks trade in a narrow band ahead of weekly expiry. Banks and financials eke out gains, even as IT, healthcare, and pharma drag.
Rain Industries surges over 7% after its arms signs agreement with Northern Graphite to jointly develop advanced battery anode material used in lithium-ion batteries for electric vehicles.
GM Breweries under pressure after a muted Q2 FY25. Net profit declines 3%, while EBITDA falls 4% on a year-on-year basis.
Okay, all right, those are the top headlines. GM Breweries, one of the first liquor companies to report numbers. Some decline here. We'll watch out for trends for the other liquor companies as well. For now, if you look at the markets, it's a 41-point uptick on the Nifty. But again, as we've been pointing out, it has come off from the highs. The Bank Nifty is up 1%. Mid-caps are falling today, 136 points lower there. We do have stocks like the pharma names, the Nifty Pharma Index, that's down around 1.5% as we speak. Nifty IT is down 1%. So as Vivek was talking about it earlier, the defensives seem to be on the back foot today. In fact, both these indices are at the day's low, and we do have TCS's numbers today as well. So that will be the big talking point, and that will be the bellwether for the IT names in terms of demand, their constant currency revenue guidance, and a lot more. So those are some stocks that should be on your radar. Even the FMCG pack is not doing so well. But overall, it is also Thursday, so the weekly expiry, that could also talk about the moves that we'll see in the last 1 hour of trade.
You're absolutely right. In fact, just pull up two stocks. The first stock, of course, is TCS ahead of results tomorrow. Just in the last half hour, you've kind of seen the sell-off accelerate. Stocks now trading near the day's lowest point, that is TCS. And the next stock on the radar, we're still trying to figure out what exactly has gone wrong as far as Lupin is concerned. Lupin, the sell-off has accelerated, especially in the last hour and a half, almost down 7% at the day's lowest point. And on the back of that, the pharma index too is seeing quite a bit of selling pressure. But Hormaz is standing by the wall. This is a special segment, Mid-Cap Movers. Hormaz, take us through the names that are moving around as far as the broader end of the markets are concerned.
It does look like the tide is beginning to turn for the broader markets and not for the good, if I may add that. But still, we'll start off with the gainers from the broader markets in today's session. Tata Chemicals is in the F&O ban, mind you, still up 5%. Fact, Sterling and Wilson is in a 5% circuit, and Keynes Tech having a good day in today's session. What's having a very good day today, though, are defense stocks after the 80,000 crore rupee approval that came in from the cabinet yesterday. All of these defense stocks are having a very good day. Shipbuilders in particular, Mazagon Dock, Garden Reach, both of them seeing gains of anywhere between 7 to 8%, as is Hindustan Aeronautics, and other peer companies too seeing good healthy gains. But Pharma, as you just mentioned, is not having a very good day today. Lupin at the lowest point of the day now. Natco Pharma, Alchem, Aurobindo, all of them trading with losses of anywhere between 2 to 3%. Stocks doing well on the back of volumes. Tata Investment is one of them. RCF, bit of news flow coming in for the stock, 7% higher. Hitachi Energy, 8% higher in today's session, and Gujarat Fluoro too having a good day on very strong volumes. And lastly, stocks that are bucking the trend in today's session. I can't really call it bucking the trend, but still on the losing end. Home First, Ambuja, almost all of them at the lowest point of the day, as it's rights after a stellar move yesterday. Stocks seeing some bit of profit booking from higher levels. Back to you guys.
All right, so some profit booking in some of those interesting names. Thank you, Hormaz, for joining in as always and letting us know some of these broader market movers. Let's welcome Sudeep Shah from SBI Securities for a technical check on the market. Sudeep, good afternoon. Thank you so much for joining in. First, your take on what's happening with the Nifty right now, and specifically some of these pharma names as well. As Vivek was pointing out, Lupin is down 7%. Have you been able to look at that particular name?
Good afternoon, Sonal, and good afternoon, Vivek. Nifty Pharma, last few days we had seen it consolidating in a narrow band, and yesterday's session we saw some kind of a decent breakout on the upside. Now today, with the kind of action that has happened and looping now from higher levels, the way the stock has fallen, it has engulfed the previous, at least, if I'm not wrong, it would be at least 3 weeks or 4 weeks candles. And this is the serious damage of the chart. So I feel that one should avoid bottom fetching here with the kind of selling pressure that is accelerating every passing minute here. 6.5% down, and the stock has broken its important support zone, which is around 2150. So I feel till the time it is trading below 2160, 2170, one should not be bottom fishing here in this counter, and this could continue its down move at least up to 2080, 2070 in the coming few sessions.
Sudeep, have you had a chance to look at the IT index ahead of TCS results, and what are your top picks for the day?
Really, if you see the IT index, what has happened is that yes, last 2 days we have seen some consolidation in the, and specifically the last 2 days we have seen large caps move well. But ahead of TCS's numbers now, there's some kind of wait and watch approach going on, and I feel from the higher levels there is some pressure today in the IT names. Specifically, if you speak about TCS now, what has happened with TCS is that the stock has been in a downtrend since last 1.5 months, right from 16 September, and the downfall is steadily increasing up. And what we feel is that 4200, 4190 will now act as a strong support on the downside. Now that is the 100-day moving average, and once this is taken off, the stock could fall up to 4050, 4080 levels. So on higher levels, 4280, 4300 will now act as a resistance.
All right. Okay, Sudeep, thank you so much for joining in today with those chart checks and what the outlook is for Pharma and IT, especially because these two indices are at the day's low as we speak. We'll sip into a short break now. When we come back, we'll get you more on the markets and talk about stock-specific action on the other side. Stay tuned.
Welcome back to Midcap Radar. Well, a couple of stocks on the radar. One stock that's doing quite well in the session today, in fact, has picked up pace, is actually Kotak Mahindra Bank. Kotak Mahindra Bank now trading near the day's highest point, almost 4.5% higher is where Kotak Mahindra Bank is, as you can see on the bottom of your screen. 4.5% higher, 1,880 is where Kotak Mahindra Bank is. When you're talking about Lupin, just a while ago we mentioned about how the stock was down almost 8%. A mild recovery seen in that particular name has just bounced off from the day's lowest point, but continues to remain under pressure. Well, the next stock on our radar is Star Health Insurance. The stock is under pressure after a concerning data leak. Vamakshi is here with more details.
Well, absolutely, Vivek. The stock is under pressure today after hackers claimed that data of over 3 crore customers of Star Health was leaked, and this data leak contains sensitive information of customers, which includes their name, policy number, mobile number, PAN number, among several other details. And hackers claim that the Star Health CISO, who is Amarjeet Khanuja, sold them the data. Star Health says that they were a victim of targeted malicious cyber attack. it resulted in unauthorized and illegal access to certain data points. However, they add that rigorous forensic investigation led by independent cybersecurity experts is now underway. The CISO has been cooperating in the investigation, and they further add that they have not arrived at any finding of wrongdoing at this point of time. They're closely working with the government and regulatory authorities as well at every stage of the investigation. Further, Madras High Court at their request has also directed all, including certain third parties as well, to disable access to the relevant information. As of now, Star Health says that operations remain unaffected, all services continue without disruption, but this massive data leak is a concern for the stock market. As of now, the stock is trading under pressure.
Okay, all right, Vamakshi, thank you so much for all those details. But you're also tracking 361 VAM. It is higher in trade on the back of a fresh note by UBS. Tell us more.
Well, absolutely, Sonal. The stock is surging higher in an otherwise steady market, and that is because UBS has initiated coverage on this counter with a buy rating, target price of 1,250 per share. They say that the company commands a dominant position, almost 8 to 10% market share in India's wealth management industry. Their core annual recurring revenue, or ARR, is growing faster and is expected to grow faster than the overall revenue of the company. They're expecting ARR to post a CAGR of almost 21% as compared to 15 to 16% expected for the company over the next 3 years. Their wealth recurring AUM, which could post a CAGR of almost 23%, and this again is much higher as compared to what the overall company is expecting. Core profitability is expected to improve, backed by higher operating leverage. They also have several new business avenues, which includes HNWI and global businesses that pose upside risk. Further, they're expecting return on equity to improve from 24.5% to almost 32% in FY27 and 36 to 37% by FY29. They do take note of the fact that the stock has seen a considerable re-rating of late. In fact, the stock is trading 45% above its 5-year average PE, but they believe that the market is underappreciating the medium-term EPS growth potential. They're expecting EPS growth to come in at 15.6% CAGR as compared to only 12.4% that is being factored by the market. So given those factors, they believe that there is still room for re-rating in this counter, and given that, on that note, they have a very bullish call on 361 VAM.
Thank you so much for that, Vamakshi. 361 VAM doing quite well in the session today. Let's now slip into a short break. We'll get you more on the markets and focus on mass financials. Stay tuned.
Welcome back. You're still tuned in to Mid-Cap Radar. The Mid-Cap index, by the way, has slipped further. The index is down 230 points right now, so some pressure building up there. Even Nifty has come off from the highs of the day. But one stock in the broader market which is doing well is Mass Financial Services. It is on the back of an Equirus note initiating long rating on the stock. Abhishek is telling us more. Abhishek.
Equirus has initiated coverage on Mass Financial. They have given a long rating and the target price has been set at 401 per share. So consistency, conservative and compliant is a classic lending model followed by Mass Financial is what they state. They also say that direct retail share will increase from 66% that it is there right now to about 75 to 80% in the future that is going ahead. So asset quality across economic cycle or business cycle has been really stellar for Mass Financial. So the average credit cost in the last few years, that is 4 to 5 years, has been around 1.6% level. So with a huge opportunity in MSME lending, an opportunity they state at 78 lakh crore, Mass Financial diversified portfolio, this augurs well for 25% AUM CAGR over the next couple of years, along with the fact that PAT will grow at 24% CAGR over the next 2 to 3 years. So they estimate FY26 ROA at about 3% and FY26 ROE at about 14%. So they believe that Mass Financial has the perfect elements of a top quartile NBFC with respect to promoter pedigree, stellar asset quality track record and healthy capitalization as well. Back to you.
Thank you so much for that, Abhishek. Mass Financial holding steady in otherwise weak market. While we leave you, the Nifty Pharma index continues to remain under pressure and quite a bit of selling pressure has emerged the last half hour of the session. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner. When we return.